Welcome back, everyone. This is The Horizon, a podcast focusing on helping investors understand what's really going on with real estate investing. Now, I want to mention that I'm doing this podcast separately from my role as the head of research at Marcus & Millichap. So remember, the thoughts I share here are my own and do not reflect the opinions or positions of Marcus & Millichap. With that, I'm excited for my conversation today with Ben Lapidus. Ben's the CEO and co-founder of Playground, a condo flex development shop, and he's a principal of Best Ever CRE. So let's get started. Okay, welcome back. This week, we're going to talk a little bit about some niche real estate investments. One of the things is I go around the country, I'm actually talking to some of the largest institutions in the industry. And, you know, they're trading in office and industrial, retail, apartments and everything else. But one of the questions that keeps coming up is about niche investments and how they're entering the marketplace. This is not something where there's a huge amount of data. There's not a critical mass of opportunity, but there are a lot of different, very unique aspects of commercial real estate that aren't mainstream. And so Ben here, I think, is pretty much about as expert as you can get at this. He's running Playground, and that's one concept that he's developed, and he knows a lot about a lot of things. So Ben, why don't we start off with, why don't you talk a little bit about Playground? We'll just get started there.
Yeah, sure. Playground is a condo flex development and investment shop. We build unique spaces for unique users to enjoy. Flex is kind of a cross between office, retail, warehouse, self-storage. You can use a large unit plugged out with all of its utilities to do almost anything. You could even live in the unit if it was zoned for it. It's just, what does the user want it to be? And so having a efficiently built row homes, if you will, of flex units allows for there to be a community of users that co-own a space with shared amenities and their own independent third space away from their home or their office to work, play, store, thrive in their lives.
Wait. You're calling this a flex what?
Flex industrial space, flex warehouse space. You know, I might use multiple terms on you here, John, because there is no consensus on terminology in this industry right now.
And that's exactly my point. We got to get something that has a little bit more marketing appeal to it, I think. So tell me what you do. So basically, you are building out spaces, and people can buy these. You don't know, is it going to be a purchase model where it's a condo or leased? But set that aside for a second. But what are they going to do there? You kind of have this big, giant, open-ended response to that. So anything short of living there, but give me some examples. What do you think somebody would do with this?
Yeah, you know, we've analyzed about 4,900 units nationwide, and the most common use case that we see is the gearhead community. People storing their fancy cars, their Batmobiles, their expensive RVs in a place that is not I'm going to increase the rent on you every month for a dirt pad behind a chain link fence kind of a place. They can build it out. And they're building out something that they own, so they can fancy it up. They can add amenities to their unit. They can add a mezzanine, a kitchenette, a mud sink, a bathroom. They can host their family there to convene before they head off on a big adventure. So that's the most common use case we see, is people tinkering with their toys and storing their toys for recreational use. Other use cases that we see are business uses, small team business uses, whether it's a catering kitchen, a contractor garage is a commonly known use case in the for rent side. Imagine that you're just tired of paying for rent. Maybe you're not feeling the love of TLC from your landlord. You want to own your own unit. You want to benefit from appreciation and depreciation from the tax side. And so you want your team to be able to convene at 7 o'clock in the morning in a little bit of a nicer facility that you own and you can deck out for yourself before you head out to do your servicing jobs, whether it's HVAC, plumbing, mechanical, catering, kitchen. There's other personal uses like building out a basketball court, a pickleball court, a soccer field, a climbing wall, a personal gym inside of your unit. Combining some of these uses together where you've got a corporate office on the mezzanine for 2 or 3 people, or a place to convene for your workers or laborers underneath the mezzanine. You're also tinkering with your toys on the side, or maybe you've got some workplace amenities like a ping pong table. It's just a very flex setup. A lot of these units have roll-up doors as well as man doors on one side, and sometimes they back into another unit. Sometimes they go all the way through the unit where you've got a glass facade on the front with curb appeal, and it presents like retail frontage. And so you can choose what percentage of your space do you want to be customer facing, a retail setup versus a warehouse or office setup in the back. And so we're seeing a lot of really unique use cases. Art studios, influencer studios, those are more niche, but I mean, it's all over the place on what you can do with this, which is why it's most ubiquitously and colloquially referred to as flex space, which has become kind of a catch-all for a bunch of different build types.
Because when I think of flex space, I think of industrial flex space, which may have a office space in it and warehouse space and that type of thing. So this is almost like a lifestyle / business flex space where you could have two people in units next door. One of them is owned by a small businessman or a small business person who uses it for personal stuff as well as work stuff. And again, the thing that came to my mind was somebody I know has a personal pickleball court in a small warehouse that they use as a business thing where they can do things with clients, but they also use it personally all the time. So it's something like that, but it could also be a place where you're going in and hanging out with your friends to fix cars, build out the Batmobile, as you said, or something like that. But how is it? So are you actually kind of syndicating this? Are you trying to pull in investors? We go in and we build these things out. You're developing these types of facilities. Is that the model you're playing with?
Yep, syndicating the capital to develop and construct these facilities where the majority of units are going to be pre-reserved multiple times over so that we can be in and out of the transaction as quickly as possible. One of the values of Playground is accelerated outcomes, not just for our investors, but also for our customers, our purchasers of these units. So yes, that's the play. Syndicate the capital, build, construct, or develop, construct, sell.
Sell it off, get out, move on to the next one. And so it's a lot different from a lot of the syndication models where people are going in, you're buying a multifamily building and you're owning that over whatever 5-7 years, create value in there somehow and generate a return on that. This is really a development syndication. Okay, I get it. Is this a big space? Is there a lot of people going into this? Is it just you? Are you the mastermind behind this thing? Where do you see, the competitive landscape on this today? It's something I don't know a lot about. I'm so focused on mainstream real estate that this is fascinating to me.
Yeah, I'd say that there's a good number of niche asset classes across the entire spectrum, but specifically inside of industrial, we're seeing a lot of needs not being fulfilled, especially on smaller scale stuff. And I'll kind of give you a stat to color that picture a little bit. 36% of all industrial space is smaller than 10,000 square feet, but it only represents less than 10,000 square feet represents 4% of the supply being built today. Meanwhile, over the last 10 years, the amount of square footage of less than 10,000 square feet per capita has decreased over time. Per capita, the amount of square footage has decreased over time, which is kind of crazy. So we see that there is a whole new space for just consumer demand of this industrial space. Basically an elevated storage unit that has multiple uses and all of the utilities plugged out into it of over conservatively 350,000 units to be constructed nationwide. And we have seen less than 10,000 be built nationwide. In fact, we can't get our hands on data for more than 5,000. So we think that we're in like the top of inning 2 of this asset class for the consumer demand side of condo flex, if you will. Did that answer your question?
Yeah, but so what's the biggest challenge? It's got to be land, right? Finding a place to put this.
Land is a big challenge. You're right. It's not as much of a concern to have the frontage as you would in like a self-storage space. But I'd say the second, I think the biggest challenge is nobody knows how to sell this thing. If you can't hire a broker, right. They use their traditional approach to brokerage, even if they're creative. It's just not inside the same wheelhouse. You need to be specialized in selling these units. And that means that you have to create your own competency in understanding the varying needs of your customers, the customability of the sales process, and then actually execute on this. So the very first one of these that we could find was built in 1999 on the Front Range. And the most saturated place in America is across the Front Range of Colorado. And there is a small handful of people who have built out companies over the last 20 years, but none have gotten to be very big. None have become institutionalized. And so there is a very small handful of people that have a decade or so, or 2 decades of experience selling these units. And that hasn't really been popularized, hasn't been offered as a service. Folks haven't branched out and started their new companies. And we're really just starting to see that happen in the last 3 to 4 years as the self-storage industry has ballooned and become some untenable for some tenants. I would say that the self-storage space is still a great place for customers and for investors, but an alternative is really starting to blossom in this for sale space because it's a cross between self-storage, warehouse, office, and retail, and it meets an overlap of a lot of niche needs all in one construction type.
Yeah, the first time I saw something like this was actually a derivative of self-storage. And it was actually, people's ATVs and basically they were storing all those, and they had a loft built in there, and they had, a variety, they had a bar built in and that type of thing. And it was almost
Cave Creek, Arizona?
No, this one was actually up in Oregon where I found that one. But it's a unique idea, but you're right. How do you sell that? You can't go to your local realtor and say, hey, you got these things, and commercial selling those, it doesn't make sense. You almost have to build out your own sales force in a way. I don't know.
That to me has been the thing to overcome. Everything about this investment type is doable and transferable from other investment theses: development, construction, capitalization, acquisitions, dispositions, all that stuff. The part that's new is selling industrial condos to consumer purchasers. That's a new thing that you don't really see in a lot of different asset classes. So, other asset classes that are of interest that have terms that didn't exist 5 years ago, like IOS, industrial outside storage. That was not a term that existed 5 years ago. You kind of see like the shop and yard positioning on a random flyer. But now you're seeing groups that are starting to roll up, quote, industrial outside storage. You're seeing ISF, industrial small bay flex, which is a very specific use case. You're seeing data centers have their own use case. So the industrial space has really started to branch off into a lot of different niche plays that haven't been formalized with their own data set and institutionalized by that data set.
Now, iOS, the industrial outdoor storage. So about a year ago, my research team, Mark Smilchap's research team, we put out what was probably one of the very first reports on iOS. And there was just an absolute flood of interest. We had media coming to us. We had hundreds of investors calling us up and asking for more information. And there really is not a lot of information on this. And so we've been combing that space. We went back, we wrote another report on it. And it is also very irregular, right? So there's a whole bunch of flavors of this. And so, and investors really want this quantified, specific answer. What is the occupancy rate, or what is the rent? And it's so fluid. And these things are almost one by one by one. They're almost like a concept as opposed to a specific asset class. It's not like it's an office building or an apartment building where you can put it in a simple box. A lot of these things you're talking about are very, very dynamic. But I think that they're a huge part of where real estate's going. I think that this is, for commercial real estate, going to be one of the top growth areas. And again, the institutions are trying to figure out, how do we play in this? But they're inherently, this is contrary to base their fundamental models at the biggest institutions, because it doesn't fit in a box. So I don't know, how is this going to play out? Is this really going to be a small investor playground, do you think, or do you think that it'll mature and ultimately become something that the bigger institutions can play in?
I'll answer that question, John, but I kind of want to make a statement based on what you said, which is I feel like, this is a feeling, no facts here, there is a reach into niche plays that is happening as a result of a longer term trend of rolling up in institutionalizing asset classes. So if you look at the last 40, 50 years, as the financial services industry matured, Salomon Brothers invents the commercial mortgage-backed security, and everything that's happened since then, the play has been consolidation. And so data has been broad, to represent major food groups, multifamily, office, retail, industrial, hotel. And where do you find opportunity today if everybody's kind of playing from the same roll up, same data set playbook? And to me, I think that the trend of pushing towards niche is emblematic of a multi-cycle play kind of playing out a little bit, especially for the small to mid-size investor. The way to differentiate is to create your own unique data set and not depend on the same data set that everybody else is playing in. So you create a new niche. It's not its own asset class. It's almost with respect to its own investment thesis or a small subset of companies that have the same investment thesis. And you say, okay, there's now consumer demand for sub 2,000 square foot industrial space, if you will, and we're going to call it condo flex. Sounds cool. I see that as being built at several 100,000 units nationwide. The heuristic that we're using is 1% to 2% of American households with $1 million net worth or more. And when you boil that down, there's at least 350,000 units of demand. And that's a conservative estimate. We have found that units continue to sell even when there is over 4% saturation of the American households in a 10-minute drive ring with $1 million net worth or higher. So it probably could grow to over 1 million units nationwide for just consumer demand. But if you go into for rent space or if you try to buy a one-off, 99.8% of users for this space are business users. And so there's really no place to go if you are a consumer and you want that pickleball court that I know you want so bad, John. So I see this playing out as, like I said, we're in the top of the second inning. When you're selling your units off, you're more of a condo developer than you are a REIT where you're rolling up a portfolio. But I do see it being the very, very, very little brother to housing development where several 100,000 units can be built nationwide.
All right, now you got me thinking, right? We put the pickleball court in the space, and I got all excited. Now then I started thinking, okay, and I don't know how deeply you've delved into this, but and I'm totally off the rails, off of what we would normally talk about on these podcasts, but that's part of the fun, right? So now I go, okay, yeah, I need 2,500 square feet. I'm going to put my pickleball court in there. I'm going to have a bathroom and a bar, and I'm going to get my friends. We're going to go in, and maybe we all go in on this. We buy shares or something, but we pool our money. But can you finance this thing? How do you finance this?
Yeah, you could totally finance it. I
can get a home mortgage to buy a home, but how do I finance this? Is it, you can't go out and get a loan on something like that, can you?
We're seeing historically of the data that we've been able to collect, which is sparse. We're seeing about 70% anecdotally are not financed. So the vast majority of these purchases are surplus cash. And so you are really appealing to a certain demographic, which is why we are constraining the builds to a certain series of zip codes or lot blocks of affluence. That being said, they are financeable. You could get a small business loan if you've got a business use case. And to your point, we were talking offline. If you are writing this off as a business expense because you occasionally use it to host business relationships, but for the most part, you're using it for enjoyment, then it becomes a business expense that you can leverage business income for. So it's definitely more for the entrepreneur if you're going to be financing it, but you can get a small business loan. If you are going to build a pickleball court and then rent it out on PeerSpace, let's say, or an influencer studio and rent it out on PeerSpace, you can underwrite a amount of revenue that you could get a traditional loan, not an agency-backed, housing loan, if you will. Okay. But what we're seeing is mostly folks coming in and buying it with cash because the demand is so pent up that these things are sold out before it's even constructed. So
what would something like this cost? Getting down to it, I said, okay, I'm in. I want one 2,500 square feet. I'm going to go in. Do you have any idea?
Yeah, 2,500 square feet would be on the larger side. So that'd probably be multiple units being packed together, and you'd be looking somewhere around 700, 800 grand for a unit that large.
Built out, or that's the shell?
Not built out as a pickleball court, but mostly built out. Yeah. So you've got your basics, not your high end finishes for a bathroom. So you might want to replace your finishes, not your high end finishes for a mezzanine as a watching spot, but you've got the infrastructure to put the $30,000, $60,000 mezzanine into it.
Got it. All right, let's shift gears from my man cave where I get to play pickleball or entertain friends or shoot my videos and go out and do this. Let's talk about some of the other niche products out there. What about data centers? I know that's not your core expertise, but it's certainly in the headlines. And I was at a conference yesterday, as a matter of fact, or no, day before yesterday, where they were talking a little bit about this. So I can contribute some. But what do you think about this whole data center thing?
I think data centers has a ton of opportunity, and the demand is going to be outpacing the supply into the foreseeable future. We could talk about why. And it has one main threat, but that threat has not really grown up to become a reasonable threat anytime soon. So we can talk about both of those. To me, data centers are an incredible investment opportunity if you can figure out how to even access it, because there are not a ton of companies that are independent of technology companies that are building this out. There's only a small handful that are doing it professionally and institutionally, and they mostly have institutional level investors. It's not accessible for retail capital. And the second constraint that it has is access to energy. So you need to co-locate your data centers in places where you are producing the energy, because you have energy loss, energy slippage as it transmits over cable lines or fiber lines or whatever the lines are that energy transmits through. So you want to co-locate it so that you are getting as little lossage, as little slippage as possible, and that you can have efficiencies on your energy production costs. So you're seeing them being co-located against solar panel farms. And it's at the point where, for the first time ever, a private company is now investing in producing nuclear energy plants for the first time ever. Google just announced plans to build 6 nuclear energy plants in the last quarter. That's how in need they are for energy. And I don't know if everybody's tracking, but crypto mining has more than doubled the need for energy since its birth, which is just crazy to me. Crypto mining and crypto logging. So, is it really a net benefit, this decentralization of power, of information? And that's the main threat, is what is really behind blockchain technology. It's not the crypto coins. It's the decentralization of information so that it remains intact and not manipulatable from hackers. It's the paramount of security, because you've got fractions of your data, fractionalized information that are dispersed across an entire network. So if each one of our cell phones becomes its own little server, do we still need data centers to house the data if the data is fractionalized across hundreds of millions, if not billions, of mini servers held in the hands of individuals? That being said, it doesn't look like the technology, the ability to store mobile servers, is coming anytime soon. So, yeah, a bit of a spiel on the random niche of data centers. But if I could get in, I totally would.
This is exactly why I love having you on the show, and why for years, literally, I would call you up and say, "Hey, what do you think about this?" You're just like this sponge of knowledge that you're soaking up across so many different spaces. One of the things that I heard at that conference the other day, they were talking about outdated manufacturing facilities. So U.S. manufacturing has been shrinking for years and years and years, but there's a lot of those old manufacturing facilities which do have access to power, but those facilities are being mothballed and they're not being used for manufacturing anymore, but they still have that energy infrastructure tied into that property. And so I was talking to somebody, they were talking about putting in data centers next to that facility and getting basically buying off that access to the energy and plugging it in and using it for a data center. So it's almost like a reuse recycle model on something that's no longer being used. There is, of course, AI, which is going to drive this astronomical use of data. But you're right. This is a super small, niche product. It's hard to find anybody investing in it. And there are a lot of technical aspects of it that are very complicated. Access into that energy. In some cases, I think they need water, cooling, a lot of other stuff that goes on with that. But I don't know. Where is this? Do you think that this is something that goes mainstream? I know institutions are looking at putting capital into this area, but again, it's super small, it's super niche. I don't know that it'll ever be big enough for them to go in heavy with something like this, and maybe small funds or something for a big
into data centers specifically.
Yeah,
I think if they don't, the major tech companies of the world are going to consume the financial services industry. It's like the private equity, the capital institutions. I between energy storage and moving into energy production to create data storage, and moving into energy production to create the data storage, which is becoming one of the largest consumption components of our society, is data storage. The tech companies that have to create their own energy production to facilitate the data storage are going to do the same thing that Amazon did with web services. Amazon Web Services started off as an internal product because there was not something good enough for Amazon. It was such a good product that they put it out there, and it now, I think, consumes something like 30+% of the market share, if not more, of data storage in the world. And so if you move into energy production, I see the same thing happening. And so if we don't see the private equity move into data centers, I think we're going to see tech move into private equity, because, like we've talked about on several of our other conversations, that as companies grow, they lose an opportunity to continue to gain market share because they've consumed all of it. So they need to go into other industries. And big tech, as we've talked about, is the powerhouse of the U.S. corporate equities. They're the ones holding all the cash. They're the ones holding all the power. And they're not really being beaten up too bad in antitrust. The new administration is probably going to get away from any of the antitrust stuff that just started to kind of pick up in the last 3 or 4 years. And they're going to continue to consume the world.
So we kind of skipped over the one thing this week, but it was just kind of, actually, we started the conversation before we even hit go, and we just kind of continued it into this, and we recorded it. But what I do want to do, I want to stick with that horizon model, right? So now let's take all these things we've been talking about. Let's look forward 5 years. Where do these models play? Are these all becoming mainstream? We did talk about the data centers and how, it kind of goes one way or the other. Either financial goes and underwrites the data centers, or the tech firms go out and build them out. Honestly, I think that might be the more likely outcome. I think that they're already pointed that direction. They're building nuclear plants for God's sakes. This is who they have the capital to do it, and they're going to do it. I think there are going to be investors who get in on this, but it's going to be not as big as Microsoft and Google. What about all of these other niche plays? Is this the pathway forward? Are these the long-term investments that small investors should be going, I'm going to go look into Playground, or I'm going to go look into biotech or iOS, or all of these other little segments of the investment market? And I should, before we go there, I should also mention we also have another podcast in the best ever community, Beyond Multifamily, that delves into these things a lot more than we are here. But what do you think, Ben? Is this the big opportunity for the next 5 years, or is this just kind of some little side gig thing?
I think for small to mid-sized investors, yes, it is the series of niche plays that you cannot find adequate data to mitigate your risk is where you can find the opportunity. If you know your community, if you know your town, your market, you can create a starting point of an investment thesis that you can then grow nationwide. And I do not think it will be these niche asset classes will be institutionalized for a couple of reasons. One, you have to learn as you go. And big institutions don't really like to do that. They like to hire the competency with 10 years of experience who can deploy the data set in a way that is kind of down the fairway. And number two, the world is changing faster than ever. And so the niche asset play today might not be the same one in 10, 15, 20 years on the next cycle. So I see it being institutionalized, if you will, through the intermediaries, the investment managers who take a family office, endowment, pension fund cash, and then place it into operators. A lot of those investment managers over this last cycle said, why don't we just do this ourselves? Why don't we build out our own in-house multifamily product? Why don't we build out our own in-house self-storage investment thesis? I think that's going to be difficult to do with these niche asset classes. But if you're chasing yield, especially if you don't have access to it in equities or bonds, and you need to kind of look inside of commercial real estate, if you're chasing yields, doing that through the smaller operators and the smaller sponsors is going to be the future. That's my best crystal ball answer anyway.
I love it. I love it. And I, when I look at it, I'm not too far off from you. I think that that's a huge opportunity, but you have to be comfortable with uncertainty. And if there's one thing institutions are not comfortable with, it's uncertainty. So great. Well, fantastic. Thanks, Ben. It's been great chatting with you this week.
Thanks for having me, John.
All right. Thank you, Ben. And thank you, best ever listeners, for joining me today for my show, The Horizon with John Chang. I'll be back next Tuesday and every Tuesday with other fantastic guests and real estate insights to help you understand what's really going on in the real estate world. So I'll see you next week. And as always, keep your eyes on the horizon.